everybody. My name is Nicole and I'm a technical analyst and private investor. And today I thought I'd look at the foreign exchange market because this week we've seen some subtle and I think for some unexpected changes in the value of different currencies. My first chart is that of the Swiss franc against the US dollar, quoted the European way round, i.e. how many francs and centimes do I need to get myself a greenback? It's a weekly chart. And I've deliberately chosen this one because this is the currency that has moved least against the dollar. It's by far the steadiest. And now recently it's got a little bit stronger. And you can see that it's moved after the massive gyrations in March, where just everything went off the radar, off the scale rather. It then consolidated in a sort of triangle type thing. And now it's on the move lower, i.e. the Swiss franc is getting stronger. Now, we are currently at 2 standard deviations below the mean regression of the last 5.5 years. So we are pushing at the boundary of what's acceptable. Also, I think for many people, the fact that you need just 94 centimes to get yourself a dollar. I mean, that is also quite, surprising in that, parity is usually considered sort of, very much a psychological level. It's yet another headache for the Swiss National Bank, as I say, who's been battling to keep this thing, stopping it from getting stronger for at least a decade. And they are the ones with by far the most extreme monetary policy around. Their worry is particularly against the euro, where we're at 1.07 Swiss francs per euro. But quite honestly, I think we're going to go against the euro down to 1.05. Which was this year's low in March. And against the US dollar, I think we're going to drop down to probably below 90 centimes. So there we go. Just we have to live through that. Now, my second chart is one of this year's major currencies that has seen the most extreme moves. It's the Australian dollar. This is quoted as US cents per Aussie, and it's a daily chart. And you can see the massive plummet that we saw in March when it dropped to just 55 US cents per Aussie. And now it's bounced all the way back up to about 70 cents. So this is a significant move. I think you will agree, a 20% move since March it hurts. It hurts or it's brilliant, whichever way the side of the fence you're sitting. All aspects of this Ichimoku daily cloud chart are bullish. You can see that where the moving averages crossed a while ago. It is not overbought on the relative strength index. Momentum is bullish. And so I think there's quite a way to go on this one yet. And I would suggest we might claw our way all the way back up to 81 US cents, which was the high in 2018. So more to go on this one as well. My third and final chart is that of the US dollar index, because I'm thinking here, you can see if the Swiss franc is going to get stronger, the Aussie is going to get stronger, is the dollar the problem? And I think, yes, I think that is the case. And this is where the surprising element will be for many, that, it's not the other two that are gaining, it's the dollar that has a problem, and quite a big one at the moment. And it's suddenly made quite clear this week and starting last week, that this was the issue. And so dollar index is a basket of major currencies. We're just talking major currencies, not emerging markets today. And you can see that 96 on the index is a sort of watershed level. It's not a do or die because we have been holding between 90 and 105 on the index for 5.5 years. Again, 5.5 years on this one too. But what we're doing now is pushing out of the sort of midpoint of the range that we've become so accustomed to. And we're barreling on towards that lower band. I think we'll get there. I think we will get down to 90. And that is the do or die level. That is where I think then things will really start to crumble. But as and when we get there, I've been promised to come back and give you an update and see what the next sort of moves are likely to be. That's for another day.